All right, so let's just dive right in. Imagine a company's stock goes up like 158% in just 6 months, all thanks to AI.
Wow.
That's Upstart Holdings.
Yeah.
They want to like revolutionize lending, and there's this like big risk in 2025 that they're going to have to deal with. And we're going to unpack all of this based on this article we have from the Motley Fool. So buckle up. It's going to be pretty interesting.
Yeah, you know what I find really fascinating about Upstart is how ambitious they are.
Right.
Like, they want to challenge the FICO score, which has been around forever. It's been used for decades to make lending decisions. But Upstart is saying, like, hold on, AI might be able to do this even better.
Yeah, so for years, lenders have been using that mysterious FICO score to decide who gets a loan and what interest rate. But Upstart is basically saying, hold on, AI might actually be able to do this better and even fairer.
Right.
It's not just about replacing FICO. It's about like making the whole system more inclusive and accurate.
It's exactly. And Upstart's AI can look at way more stuff than a FICO score. It uses over 1,600 data points and a massive amount of data from 77 million repayment events to predict defaults.
Wow.
So think about it. Instead of just looking at, like, your payment history, what if lenders looked at your career, your online behavior, even your social media network's financial health?
So like how much money your friends have.
Yeah. It's like a whole other level of insight into your financial life.
Yeah, it's like they're trying to get like this full picture of you and your finances and really figure out how risky of a borrower you are.
That's right.
It really makes you wonder what this means for someone like me, like an average person applying for a loan in the future. Could this maybe even help people who maybe don't have the best credit score but are actually really responsible with their money?
That's the hope.
Yeah.
And it's definitely gotten investors excited. But, you know, Upstart's journey since their 2020 IPO has been kind of a roller coaster.
Yeah. The article mentions how profitable they were at first and how everyone was super excited about them. But then 2022 happened and things got kind of shaky with all those interest rate hikes.
Yeah, rising interest rates always make investors nervous, especially for a company like Upstart that's tied to the lending market. When borrowing gets more expensive, fewer people take out loans, and that directly impacts Upstart's business.
So it's like they're riding the waves of the economy. Good times mean more loans, more business for Upstart, but any uncertainty can really throw them off course.
Exactly. And that's exactly what we saw in 2022. Investors got scared, pulled back their money, and Upstart's stock dropped. It was that classic boom and bust you see with these innovative companies that are trying to disrupt the status quo.
But then things changed again, right? Their stock has gone up 158% in the last 6 months.
Yeah.
That's a pretty big comeback.
It is. And falling interest rates have definitely helped to bring back that investor confidence. Plus, you have big companies like Castle Lake and Blue Owl Capital investing a lot of money into Upstart, which shows that they really believe in their AI-driven model.
So it seems like Upstart is doing pretty well right now, but the article does mention a big risk that they're facing in 2025. The Fed's plan to like slow down their interest rate cuts.
Yeah, that's the big question mark for Upstart. Everyone was expecting interest rates to keep falling, which would lead to this refinancing boom. It'd be amazing for their business.
Yeah.
But if the Fed decides to slow down or stop those rate cuts, then that refinancing boom might not happen.
And if that happens, then obviously that would affect their revenue and profitability because fewer people would be refinancing their loans.
Exactly. And the problem is no one really knows what the Fed is going to do. Some experts think rates will keep falling while others aren't so sure. It's a waiting game at this point.
So even though Upstart is doing well right now and investors are excited about them, this potential risk in 2025 is something to keep an eye on. The article also mentions that Upstart's current valuation is quite high, which could be a warning sign for some investors.
Yeah, their stock is trading at 5.5 times their projected future sales and 55 times their projected future earnings. This means that investors have very high expectations for Upstart's future growth, and those expectations are reflected in the current stock price.
So is Upstart worth the risk at its current price? Their business is doing well and their loans are performing well, which indicates that their AI model is actually good at assessing risk. And they've also managed to automate 91% of their operations, which shows they're efficient and can scale their business. But that high valuation is making some people hesitant.
Yeah, it's a tough call. There's a lot of potential, but there are also risks.
And this leads to another important question. What does this level of automation that they've achieved, what does it actually mean for the average person?
Imagine applying for a loan and getting a decision in just a few minutes instead of waiting days or even weeks. Upstart's AI can analyze all that data in seconds and tell you if you're approved. That means no more waiting for a loan officer to manually review your application.
That's incredibly fast. But what about those situations where you need a human to make a judgment call? Will AI completely replace loan officers?
That's a great question, and it really highlights the bigger issue of how humans and AI will work together in the future. It's more likely that AI will help humans do their jobs better rather than replace them completely. So loan officers might become more like financial advisors using AI to help guide borrowers and give them advice and handle those really complex cases that need a human touch.
So AI can free up loan officers to focus on the more personal aspects of lending, providing better service, and building relationships with borrowers.
Exactly. It's all about finding the right balance between efficiency and that human touch.
This is really fascinating. We've covered a lot in this first part of our deep dive into Upstart Holdings and the future of lending. We've talked about their journey, their AI-powered model, the potential risks, and what it all means for someone like me or you applying for a loan.
And we've only scratched the surface of how AI is changing the world of finance and how it could change our relationship with money.
In the next part of our deep dive, we'll go even deeper into the role of AI in finance, the ethical considerations, and what everyone needs to know to navigate this rapidly changing landscape. So stay with us. We'll be right back.
Welcome back. We were just talking about how Upstart has automated like 91% of their loan process.
Yeah.
It's kind of crazy to think how AI is like changing things that used to take so long.
It really is. It's a game changer for finance. Like all those forms and documents and waiting forever to hear back. AI can do all that so much faster.
So for our listeners who might not be like finance experts, can you break down what this 91% automation actually means? Like, what does it look like in real life?
Okay, so imagine you apply for a loan, and instead of waiting weeks to find out if you're approved, you get an answer like almost instantly.
Wow.
That's what AI can do. It's like having this loan officer who never sleeps working 24/7 to analyze data and assess risk super fast and super accurately.
It sounds amazing, but it's going to be a good thing for lenders and borrowers, right? Oh, absolutely. Lenders save money because it's faster, and they might have fewer people defaulting on their loans because the AI is making smarter decisions. And for borrowers, it means you get approved faster. You might even get a better interest rate, and the whole process is just smoother.
So it's like AI is doing all the boring paperwork and number crunching so humans can focus on the more like strategic stuff.
Exactly.
Yeah.
And this isn't just happening in lending. We're seeing AI everywhere in finance, like chatbots, robo-advisors, and even these algorithmic trading platforms that buy and sell stocks. It's changing everything about how we deal with money.
It's kind of freaky when you think about it. It's like AI is this invisible force controlling everything. But with all this talk about AI taking over, are we all going to be out of a job soon? Are robots going to replace everyone in finance?
That's a big question a lot of people are asking. But like we talked about before, it's more likely that AI will help us do our jobs better, not replace us altogether. It's more of a team effort where AI does the repetitive tasks and humans focus on things that need like critical thinking, creativity, and actually talking to people.
So like maybe loan officers in the future will be more like financial advisors. They'll use AI to help them guide people and give them advice.
Exactly. They'll be able to offer more personalized advice and build relationships with their clients. It's the best of both worlds, human expertise and AI's efficiency.
This is all pretty exciting. But with all this talk about AI and finance, it's hard not to think about the downsides too. Like what are some of the risks that we should be aware of?
That's a great point. Like with any new technology, there are always potential problems. One of the biggest concerns with AI and finance is bias. Like if the algorithms are trained on data that's already biased, then they could make things even more unfair.
So we can't just be excited about how efficient AI is. We have to make sure it's being used fairly and responsibly.
Exactly. We have to be really careful and think about the ethical implications of using AI in finance. We need to make sure people's data is protected and that these algorithms aren't discriminating against anyone.
Sounds like it's a delicate balance.
It is. We have to figure out how to use AI's power for good.
So listeners, we want to hear what you think. Do you think AI in finance is a good thing? Or are you worried about the risks?
This is something that affects all of us. So it's important to learn about it and be part of the conversation.
We've talked about how AI can make lending faster and easier, how it can help us make better financial decisions, and even how it can protect us from fraud.
But we've also talked about some of the risks like bias and the need for transparency and ethical guidelines.
Now, in the last part of our deep dive, we're going to shift gears a little and talk about the bigger picture of this AI revolution in finance.
We'll talk about what the future might hold for everyone as AI becomes more and more part of our lives.
Stay with us. We'll be right back. We're back and ready to wrap up our deep dive into Upstart and the future of finance. We've talked about them a lot and their AI, but let's zoom out now and look at the bigger picture. How is AI changing the whole financial landscape?
Yeah, Upstart is really just one example. AI is changing everything about finance, from
Yeah.
how we get loans and invest to how we pay for things, and even how we protect ourselves from fraud. It's a whole new world.
So for people who aren't like finance experts, can you explain what this AI future might actually look like? Like what kind of changes should we expect?
Okay, imagine you have a financial advisor who's available like 24/7.
Oh, wow.
This AI assistant that helps you with everything. Investing, planning for retirement, saving for a house, even starting a business. It's like having a financial expert in your pocket all the time.
So it's not just loans anymore. AI can help with like all of our financial decisions.
Exactly. And it can even help us pay for things. Like imagine using your fingerprint or face to verify payments, or having AI catch fraud before it happens. It can even like predict your spending habits and tell you if you're about to overspend.
So AI can protect us from making bad decisions.
Yeah, in a way. And think about credit scores in the future. They might not just be based on your payment history anymore. What if they looked at your social media, your online shopping, even your career?
Huh. That's interesting, but also kind of scary. Like, how much information will they be able to see?
That's a good point. We have to be careful about privacy and make sure all this data is being used responsibly.
So it sounds like AI could make our lives a lot easier, but we need to be careful about how it's used.
Absolutely. We have to make sure it's being used fairly and ethically and that everyone benefits from it.
So what's like the takeaway for our listeners? What should they be thinking about as AI becomes more common in finance?
I think the biggest question is, how can you use this technology to your advantage? How can AI help you achieve your financial goals?
Yeah. It's an exciting time, but also a little bit scary. But the more we know about AI, the better prepared we'll be for the future.
Exactly. So keep learning, keep asking questions, and be ready for some big changes.
This has been a really interesting conversation. We've covered a lot about Upstart and AI in finance. I hope this deep dive has been helpful for everyone.
I hope so too. And remember, the future of finance is changing fast. So stay informed and stay engaged.
That's great advice. Thanks for joining us, everyone. We'll see you next time.